In this video we are going to talk about the Bitcoin situation. So before starting this video, please like this video, subscribe and turn on the notification to our channel for future updates. Bitcoin is a cryptocurrency that was created in 2008 by an anonymous person or group of people known as Satoshi Nakamoto. When the currency's implementation was released as open-source software in 2009, it went into use. Bitcoin is a decentralized digital currency that can be sent from user to user on the peer-to-peer Bitcoin network without the use of intermediaries. It has no central bank or single administrator. Network nodes use cryptography to verify transactions, which are then recorded in a public distributed ledger called a blockchain. As a reward for a process known as mining, Bitcoins are created. It is possible to exchange them for other currencies, goods, and services. According to University of Cambridge research, there were 2.9 to 5.8 million unique users using a cryptocurrency wallet in 2017, with the majority of them using Bitcoin. For its use in illegal transactions, the large amount of electricity used by miners, price volatility, and exchange thefts, Bitcoin has been criticized. At various times, some economists, including several Nobel laureates, have described it as a speculative bubble. Although several regulatory agencies have issued investor alerts about Bitcoin, it has also been used as an investment. Bitcoin is still considered to be a risky investment. How is Bitcoin different from traditional currency? Bitcoin is a digital currency, to put it simply. There are no bills to be printed or coins to be minted. It's decentralized, meaning it's not under the control of any government, institution, such as a bank, or other authority. Bitcoin connects buyers and sellers through encryption keys, rather than using names, tax IDs, or social security numbers. Bitcoin is mined by powerful computers connected to the internet, rather than being issued from the top down like traditional currency. How does one mine Bitcoin? Bitcoin is mined by a person, or group, or company, using a combination of advanced math and record keeping. This is how it goes. When someone sends a Bitcoin to someone else, the network creates a block that contains that transaction and all others made over a certain period of time. These transactions are recorded in a massive digital ledger by computers running special software known as miners. The blockchain is an eternal, openly accessible record of all transactions that have ever been made up of these blocks. Miners convert these blocks into code sequences known as hashes using specialized software and increasingly powerful and energy-intensive hardware. This is a little more dramatic than it sounds. Generating a hash requires a lot of computing power, and thousands of miners compete for it at the same time. It's as if thousands of chefs are frantically preparing a new, extremely complicated dish, and only the first to serve up a perfect version of it gets paid. When a new hash is generated, it is added to the end of the blockchain, which is then updated and propagated to the public. The miner currently receives 12.5 bitcoins in exchange for his or her efforts, which was roughly $100,000 in February 2018. It's worth noting that the number of bitcoins awarded decreases over time. What determines the value of a bitcoin? The value of a bitcoin is ultimately determined by how much people are willing to pay for it. There is a similarity between how stocks are priced and how they are priced in this way. Satoshi Nakamoto's protocol stipulates that only 21 million bitcoins can ever be mined. There have only been about 12 million mined so far, so there is a limited supply, similar to gold and other precious metals, but no real intrinsic value. Many mathematical and economic theories exist to explain why Nakamoto chose the number 21 million. This distinguishes Bitcoin from stocks, which are usually linked to a company's actual or potential earnings. Value is completely open to interpretation without a government or central authority at the helm, controlling supply. This process of price discovery, which is the primary cause of Bitcoin's price volatility, also invites speculation, don't borrow money to buy Bitcoin, and manipulation, hence the recent talk of tulips and bubbles. Satoshi Nakamoto is a multi-billionaire, at least on paper, thanks to Bitcoin. Among the technological pioneers, investors, and early Bitcoin miners, it has minted a slew of millionaires. According to Fortune, the Winklevoss twins turned a $65 million Facebook payout into a venture capital fund that made early Bitcoin investments and are now billionaires. Bitcoin's current situation. The roller coaster ride of Bitcoin has continued, flashing a warning sign for curious investors who may be interested in placing cash in the highly speculative cryptocurrency. According to Coinmetrics data, the digital asset soared to a fresh all-time high, nearing $58,000 per coin on Sunday. But after a slew of criticism from high-profile players, on Monday, the rally reversed. First, Tesla CEO Elon Musk tweeted over the weekend that Bitcoin's price seemed high, just as the currency's market value surpassed $1 trillion. Then, Treasury Secretary Janet Yellen said on Monday that Bitcoin is an extremely inefficient way to conduct transactions. That spurred a slump, sending Bitcoin down on Monday by more than 10%. The decline continued on Tuesday, with the currency falling another 10% to around $48,000. The extreme up and down movements are relatively prevalent for Bitcoin and are expected to continue. Volatility is the only thing I can expect for sure, said David Yermak, a professor of finance at the Stern School of Business at New York University. From day one, this has been a risky investment for people. In the last decade, Bitcoin has seen both astronomical growth and major trade-offs at various points in between. Although many bulls point to the cryptocurrency's past performance as proof that it will continue to rise in the future, Yermak believes that this is unlikely. It's a purely speculative asset, he said, adding that despite its growing popularity, Bitcoin is still not regarded as a mainstream investment. Financial experts usually advise that only a small amount of their portfolio is allocated by individuals looking to invest in Bitcoin. The Financial Conduct Authority in the United Kingdom recently issued a similar warning. People should only invest what they are willing to lose, Daniel Polotsky, CEO of CoinFlip, one of the largest Bitcoin ATM companies in the United States, said. People approaching retirement, those who will need money in the near future, and those looking to trade frequently for a profit may want to reconsider Bitcoin as an asset for those goals, according to him. Maybe there are more opportunities to make money because it's so volatile, but it can get very addicting very quickly to start trading back and forth, he said. And, most of the people that do that lose money. If you are going to assign part of your portfolio to a speculative asset like Bitcoin, take a disciplined approach and impose rules for buying and selling, said David Sacco, an economics professor at the University of New Haven. You can gain experience without blowing yourself up, he said. Buy for the long term. To be sure, when adoption continues, there are many bulls that see Bitcoin exploding in value in the future. A sell-off after hitting a record high isn't a huge concern for those determined to hold Bitcoin for the long term. And, this year alone, the assets are still up about 80%. To determine if they have some extra money to put into a risky asset, those who want to invest in Bitcoin should evaluate where they stand with other personal finance and investment targets. Anjali Jarawala, a certified financial planner and CPA and founder of Fit Advisors in Torrance, California, said if you do, then it's okay to put some cash in Bitcoin, and buy it on a day when it's down. Throw some money into it and kind of let it stay in there and season for a while, she said. Just so you're not making decisions every time there's a fluctuation in price, which at this point happens every few days. If you're willing to take on the risk of owning Bitcoin, there are a growing number of digital currency exchanges where you can buy, sell, and store Bitcoins, including CoinMama, CEX, Kraken, and Coinbase, the largest and most established of them. It's about as difficult to get started as it is to open a PayPal account. With Coinbase, for example, you can deposit funds into a virtual wallet of your choice using your bank account or PayPal account. You can then exchange traditional currency for Bitcoin once your account has been funded, which usually takes a few days. So that's it for today's video. What do you think of our list? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button and turn on notification before you go. Thanks for watching.